European stock markets are trading on the soft side this morning, with the UK's FTSE 100 index trading flat at the moment and the Euro Stoxx 50 index down around about 18 points. While the DAX in Germany was off around about 38 points. In the currency space, the euro has picked up some ground against the dollar. The South African rand, however, is taking a bit of a beating on the back of further tensions in the labour market, and with the yen, it's also weakening against the dollar after the Japanese economy minister has been backpedaling on comments that he made yesterday. Good morning, I'm Ishaq, Siddiqi, and welcome to another Daily Market Bite. I'm going to give you a quick idea of what's going on in financial markets today. So yesterday we had a weaker finish on Wall Street, and that was on the back of comments by a voting member of the Fed, Charles Evans. He was dovish on his comments. He basically said that the US economy can have a self-sustaining recovery by 2014. However, he's very cautious of nascent temporary pickups, which would suggest that he's not completely sure that the Fed can withdraw from quantitative easing just yet, and they have to monitor the situation. Investors are still digesting those comments because they're neither here or there. They do suggest that the US economy is going through a recovery, but any signs right now have to be monitored very carefully in case it's just a temporary pickup and nothing more than that. So this morning we had a pretty mixed session in Asia. In Asia, the key theme that was coming out from there was that Japan's economy minister, Akira Amari, he on Sunday night suggested that the correction in the yen, this weakness that we've seen in the yen, has largely is largely over now, and at this point it stands to hurt the Japanese people. However, he backtracked on those comments overnight in the Asian market, where he downplayed that, said that he's actually quite uncertain about that, and that's not exactly the case right now. And that actually, we had a rise in the yen yesterday, but after those comments this morning, we've had a bit of weakening in the yen. And again, in South Africa, like I said, there is a lot of escalation of the labour market tensions ahead of talks about wage increases. Now, miners in South Africa are demanding up to 60% increase in wage salaries. However, mining companies will find that very difficult to pay to their workers, given the fact that cost production is extremely expensive at the moment, and at the same time gold prices are falling. Speaking of commodities, gold is resuming its downward trend. We've also seen weakness in silver. Now, in the European session today, we haven't had much data. We had German factory prices, which eased a little bit to 3-year lows, however did very little to impact the DAX. At the same time, we also had UK inflation, which tempered a little bit too, which was actually welcome news for the UK economy, and does suggest that the Bank of England have further flexibility when it comes to deciding interest rates and monetary policy in the months ahead. Now, looking to what's going on for the rest of the session, we don't have any US economic data. However, a lot of the focus now is on Fed Chairman Bernanke and his testimony tomorrow about monetary policy. We also have the Fed meeting minutes, which will be released at the same time. Now, when it comes to Bernanke, there is a lot of talk about the Fed tapering quantitative easing. Investors aren't sure how the Fed has mapped out this exit strategy, if it's going to be a slow withdrawal or if it's going to be an immediate hit, and they start taking out liquidity from the market without really giving the market an idea of how they're going to do it. So a lot of concern and caution ahead of that meeting. So investors are at the moment staying to the sidelines and not building too much risk, and we're going to wait for the Fed chairman to speak tomorrow before we get firm direction. That's all for your Daily Market Bite. Thanks for watching, and I'll see you tomorrow.